Hello and welcome. I'm joined today by our Head of Advisory, George Moscondi. George, good morning.
Good morning, Andrew.
It's a beautiful summer morning here, beginning of August. Your team has just published its investment update for this month. Could we start with you giving us just a summary of the main views from that document?
Well, if we start off with base rates, we remain negative on base rates, although we do have particular bias towards Europe, and we see the US remaining at current levels. For investment grade, or more so for credit, we particularly have a bias towards high yield over investment grade, although the recent underperformance of investment grade does pose interesting opportunities for us. Equities, again, one of our attractive or one of our favoured areas at the moment. We still favour Europe, partly because of the strong performance that we've seen in July, and the recent economic earnings numbers that we've seen have been particularly strong there as well. And again, there's a lot of value there that we can extract.
So it's the 2nd of August as you and I sit here filming this video, and interest rates seem to be very much on people's minds. The Fed yesterday kept them as they were. Today the Bank of England is expected to raise them. As a homeowner, I'm not delighted about that. But I wondered if you could give us some sense of where you think rates are headed on both sides of the Atlantic over the short to medium term.
Well, if we look at the Fed first of all, we still believe that there'll be 4 rate hikes this year. The market seems to have factored that in as well. And looking ahead, I think September's a likely probability where we'll see an interest rate hike from the Fed. The Bank of England, as you point out, I think we're waiting for something to happen there. The recent economic data has been particularly strong. They'll keep a cautionary eye on inflation, but we're anticipating an interest rate hike there. With Brexit in the background, I don't expect any more interest rate hikes this year. And what we've seen really is over the last 10 years since the credit crisis, a significant move or normalisation, as many people would say, of interest rates, and that's partly a reflection of the global recovery we've seen.
Can we talk about equities markets for a little bit, and specifically technology stocks? We've talked a lot in the past in these videos about the FANGs stocks. That narrative seemed to fall apart a little bit last month when we saw Facebook slump, we saw Netflix user adoption stall a little bit. And meanwhile, you've got the likes of Microsoft enjoying a real resurgence in their business. I guess my question is it time to ditch this FANGs acronym and instead talk about the MAGAs, Microsoft, Apple, Google, Amazon?
Well, I mean, exactly. And I think this is really where stock picking is very crucial. We still remain positive towards the tech sector, but I think it's important to remain very focused towards the actual underlying companies, and as we've certainly seen with Facebook, subscriber numbers or user engagement was actually down, and that seems to be taken very negatively by the market, and the subscriber numbers similar for Netflix. Having said that, as the bull market extends, I think it's important to remain focused on the fundamentals of the stocks. And if you take Microsoft as an example, it's actually revolutionized and changed itself over the last 40 years. And I think that's testimony not only to its strategy, but also to its management as well.
Staying with equities markets for a little moment, I want to ask you something a little bit more whimsical. So it's the height of the summer, it's the beginning of August, as we said. There's a different mood this time of year, isn't there? And you can tell by my surfer tie, everyone's in a slightly different mood. And I just wondered, do you see any impact in equities markets on that? Do the markets change during the summer months?
Yeah, I think it's clear. I mean, the old adage of selling may come back on St. Leger's Day, I think does have some sort of merit depending on how you see things. I think it's fair to say that the markets tend to be muted in this particular period. The summer lull is a particularly interesting time, and there are opportunities. What we tend to do is look towards income, whether it's in equities or bonds, and again, with modest upside as well.
So we've talked about interest rates being on the rise, we've talked about technology stocks being harder to pick nowadays, and generally the potential for volatility during the summer months. What's an investor to do in these circumstances? You've got an investment idea in the latest quarterly that your team put out, particularly focused on income protection. Can you tell us a bit more about that?
Well, income protection really tries to mitigate the volatility, particularly in the summer lull, as we've mentioned. I think it's important to sort of identify particular areas, and we've done a lot of research, and we particularly favour the US and Europe, where we've identified investments which have attractive yields, something in the region of around 5%, reasonable valuations, and again focusing particularly on the utilities and the consumer sector.
Fascinating. George, thank you for joining us.
Pleasure.
And thank you for joining us. Please visit our website to download your copy of our August investment update, and we look forward to seeing you again in our next video.